The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman, Tiger Technicians Hour on this Wednesday the 15th of January. Now, one of the things that we were discussing going into Monday's session, and why I said that it was important that the signal that I had Sunday night suggesting that the VIX was going to become overbought on Monday, and that there could be a turnaround in the general market. All those Chapman Wave technical indicators, I don't want to discuss them now, although I had questions about them. I'll get to them over the next few days because the day's young. Who knows? Anything can happen, right? But if you look at the negative part of it, just on a purely technical basis, the Dow is up 683. It ran all the way to 43,247. It's a little bit under that, about 50 points under that right now. The 9-period moving average on Friday was so ugly. It was so much below the 14-period moving average. Oh, I especially put this up. Have I got it here? No, I haven't. Can I do it now? Will I mess up things? I'm going to do it. Let me just, because this is so important, because this is going to be one of the key factors that I look at over the next week to see whether or not there's a chance that on Friday we could be closing towards the week's high, or we're going to give back at least 30 or 40% of the big gain of today. We'll see. Okay, so here comes, this is my blank chart, and all it has is three lines. The one is the thick gray line is the price we're following. The green line or red line or pink line is the 9-period moving average. And getting a little bit sticky there, huh? All right, I'm waiting for it to come. Is this going to mess me up? Oh, I hope I haven't done that right at the beginning of a show. It's not coming. Oh, there it is. Okay. So I'm going to get rid of something right now. Should I get rid of the trading thing? I'll do this quickly. Look, this is the SPY. This is the 9-period moving average and 14-period moving average daily chart. You see the pink 9-period moving average? When it crosses green, that means it's positive and the price goes higher. When it crosses pink, it means that the price is pulled below enough for the 9-period moving average to go under the 14, the black 14-period moving average. That's the constant. And it goes pink, and then it goes back to green. When it's pink for just a day or two or a bar or two and then quickly flips back, that's usually a positive sign. If it goes longer, like it has, you have to wait for a really powerful move. Look at the powerful move. Look how ugly that was back in August the 4th. And then look what happened. So here's the August the 2nd, August the 5th. The SPY comes down sharply, makes a double bottom. Look how long it took for the 9-period moving average to cross positive. And then when it did, you finally went to that peak D. And so this is the Dow, INDU. Same thing. But this powerful move right here with the 9-period moving average not quite as ugly as the S&P says that price that you're following could very well take out that high. And if it can close above that high, that 9-period moving average is going to get closer and closer to turning green. Let's go to the QQQ. The QQQ was a little steadier, but it isn't running all that sharply. Look, above the black 14-period moving average. Look at the IWM. This is going to take a lot of work. Look how ugly that W formation was. With that it got repelled and became, it got repelled from the black 14-period moving average and became a negative W formation. Now it has to cross positive. It's got a lot of work to do, but it's a great start. If you're looking at the SMHs, so I had a question that then I said I'd get to it, and the question was from Duncan Steve. Yes. Hi, Basil. With this new economic news, can you quickly look at SMHs and the SOXS for any new direction, short term, Thank you. So look at this choppiness. So this is a chart pattern. Just for the moment, I'm going to say that rectangle formation. I'll get to it right now. This is not leadership. Up 5.27 at 250.69, only up 2.14%. It's good, but it just tells me that it's still in the range, right? That's number one. Number two is within the context of the overall market, the SMHs have not broken down, they've not broken up, almost like the gold chart. Look, here's the gold chart. Not breaking up, not breaking down, kind of holding quite nicely within the rectangle formation. The dollar, using just these three lines, core line is a thick gray line. That's the intraday price of the daily price with intraday movement. This is the dollar pulling back sharply. Look at that. Since it crossed positive back on the 3rd of October of 2024, the dollar hasn't turned pink once. It's gotten close, but it never turned pink. And this is the first time that it's in about a month, maybe more, that the price has gone below the 14-period moving average, but the day's young. I think that we're looking at the chance that the euro could be turning around and making a turn to the upside. The USD JPY is now pulling back like the dollar, because it usually goes in the direction of the dollar, not necessarily the same percentage, but the direction, and that's important. Let's go to Bitcoin. Bitcoin right now is up 3,100 at 100,000 and $100,110. It's going to be so hard to say. I don't know. We don't usually trade in 100,000s. Okay, so, at 97.25. So the pink 9-period moving average hasn't turned back to green. I suspect there's a good chance this is going to become a W formation. So I want you to use this to show you how important you can use simple tools. There are just two lines here that are giving you information, incredible information. All right, that's part of the Chapman Wave methodology. I discussed that in my webinars, and they're all for subscribers free. You can go over them as much as you want. And close workshop. Okay, close workspace right there. Yes to all. Whew. I was afraid that it was going to freeze on me or something like that. Okay, so now the price, the Dow is back up at 732, up 732. I spoke to Jacob yesterday, and I said the V-shaped formation is the absolute best, because what happens, prices move so quickly that you keep thinking you're going to get in. For instance, we wanted to add to a position today, one of our beautiful positions that we've had, and I wanted to do it for 3 days. I left it for 1 day. Then I left it for 2 days. So I said, today we're going to get it, but I wanted a bit of a pullback. SOLV is the symbol. Did it pull back? No, it didn't. It just gapped up as if to say, ha, watch me. You're going to get a chance to even add to your position for a trade, which you usually do, and it's usually great. Look at this leg B. This is Solventum, SOLV is the symbol. Healthcare spinner from Triple M. Right there. On that green bar, I said I was looking at it, very sharp pullback, but it was still holding okay. And then yesterday I said, let's do something else, because we've got stopped out of one of our core positions. Real nice gains we've had on it. I didn't want to get stopped out, but it just Monday dipped down a little lower than it did. So we got back in, and now today that one's back up very sharply. Thank goodness we're back in. Very interesting. There are other things I want to talk about, and I'll get to it in a moment.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out, like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years, with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
So let me take a moment just to go through some of this here, because I think it's very important. The selling, and one of the things I discussed with my subscribers when I did my brief Sunday overview. Usually I do an hour. This time it was not even a half an hour, hour or more usually, but usually this was shorter because I'd had this up on Thursday and I was just recovering. I just felt I had to do it. And that's why I also felt I had to do Monday, because it was such an important session. The selling pressure, for those of you who are shorting right now, to me, it's off. There's intraday, sure, you can do things like that. But look at the selling pressure. And that was part of my reasoning for going long before the market opened on Monday, because adding to long positions as well. One of the things that we looked at is, let me just go through this here. And anything can happen. Day is young, but I like to look at it. I like to step back and say, if I was one of the crowd, what would I be doing now? Well, what I'd be doing is I'd be listening to everyone who are talking about the end of the world, and this is it, and Trump's coming in, and Biden's going out, and Biden's in, and Trump's going out. Just, you can say whatever you want. It doesn't matter. Look at the selling pressure from the 4th of December in the Dow, from 45,000 to 73. Fantastic call. I missed it because we did not get a D, but I did talk about it. I said the S&P has gone to a PD. The Chapman Wave, that's where you got to be careful. 6,099.97. Look at the selling pressure in each one of those buying modes got taken out to lower lows. When that happens, people just throw their hands up and say, I'm kind of done. I'm kind of done. And that says to me that the short side, just briefly now, by Friday when I do my show before the 3-day weekend, that's going to be something different altogether. Maybe I start to think again about the S&P, SPXL, the SPXS, the S&P short position. But look at the selling, look at the QQQ. Look at the selling pressure. To me, it wasn't the price and it wasn't the time. It was that you made all-time highs. You had a round number 533 open on the 16th of December at 533. You go to 539.15, and that's it. The next thing you know, it's a month later. Less than a month later, and you've gone down to 499.70. But every single rally just got taken out, and you made lower lows. And that kind of selling pressure says, and that's the reason why when I looked at the VIX index, I said, this isn't the normal traditional Monday. I should just mention, I had a question about it. Time is of absolute importance. Yes, you've made your D in the 1-minute chart. You've made your D in the 5-minute E-mini chart, and you're only in a C. I could, normally what I would do, and this is a little abnormal. So I'm going to do this. I usually do this, and I say that 2-bar parallel high, I'm making a phantom peak. It can be taken out. There's nothing negative, but I like to be ahead of the pack, and I have rules for doing that, and that could make this a D. So now what I would do, I would say this is where, if long, this is where you take something off, raise the stop, and keep a core position if you're able to do that. Why? There is nothing. Look, the 9-period moving average has been fantastic in the 1-minute chart. Look at this. Since there was this little break at about 9:40 where it went negative and then went green again. So this is where something could happen. And the MACD is turning down. Stochastic still good, but it's at 77%. On balance volume's pulling back. So it's only the 9:14. And you've got this chart right here shows you automated Chapman wave resistance levels, a ton of resistance levels at 5990.50, and the high all-time high, the high that we've made today is 5991.71. At 8:30, we're trading at 5,900. Unbelievable. And so this is exactly where you can start to see a bit of a pullback. But is it more than a bit of a pullback? Now you're looking at 59.78, so 20 points. Not even that. 10 points, you've got some support level. So even on a daily chart, intraday, I'm saying the shorts, have been decimated. Now the longs are getting a little cocky, and it's 10.20, 10.23. So now new buyers and new sellers are coming in. So this is where look at it differently. Now I could say short term, you could look at little bits of sharp pullback, but buyers are going to have to come in because they've missed I don't want to waste time. Let's just get to the other things I wanted to say. I don't fight. I try my best. I know that I do it every once in a while. I try my best not to fight the trend. The tide said that we had reached some kind of a low tide. It doesn't tell you the dimension, the strength of the tide. It just says we've reached some kind of a low tide. And the VIX index never went to the 2832 high of 18th of December, but it did go to 22, and now it's at 16, right on the 200-period moving average. So the buyers of insurance, the volatility index, are still there. So we're watching it closely. But think of the shorts. Look, here's the SOXS. I was asked about that. SOXS, every time it rallies, it makes a lower low. Rally, lower low. It's in a down channel. It's a beautiful down channel. Look at this. At some point, that's going to change. Hasn't changed yet. So let's just do this. Let's just go to that high. Let's try to smooth it out, right? And let's go to this one here. It's almost like a falling axe formation. And look, it's just been trading in that range. And look at the SMHs. That's a long way to go to 263.58. But it did go to 240, so that's 20 points, about a 10% correction. But have a look. You've got a nice rally, but it can't get out of the rectangle. That's why these patterns are so important. Okay, so I wanted to get to something. When I was interviewed with Jacob yesterday, I spoke to him about the two different kinds of volatility decline, volatility index, and the types of bottoms that are made with a V-shaped pattern where it just happens so quickly that you can't get your new positions in because every day it's higher highs. You just close your eyes and you have to buy it. Well, that's the ideal situation. So in this particular instance, On Monday, there was an entry point. Where did I go? Oh, I typed the wrong one. There was an entry point, but I wanted to see some kind of failure intraday, because that would say to the bears, oh, yeah, man, are we going down? And that would say to the bulls, oh, man, you keep it too soon. It's too soon. As the dreaded H goes to lowercase m. You've got 2 bars to get above Friday's low, to close above the low of the mid-December low of 42,148. Can you do it? And lo and behold, it closes at the high of the day. Yesterday, intraday kept looking lousy. I didn't talk about this for subscribers because it was a small Chapman wave Roman candle. But if at any point there was a negative reading on the CPI this morning, whoa, we could have gone down to 42,311 very quickly. And that would have been the wick of this candle. Instead, here we are gapping up, and now we're attempting to get to a really important high. And I was asked if I could give you levels of resistance for the Dow. It's the high of the 26th of December at 43,373. Today's high is so far 43,269. If we can get above that, that's important. I'll be back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Hi folks, we're back. Basil Chapman, Technicians Hour. Dow's up 697, a little bit of a pullback. So remember, the tide is the most important thing. I don't know if I got a chance to do this with Jacob yesterday. I had it all written down. We discussed so much. But if you look at some of these cyclical stocks, look, here's Dow Chemical. Look at that candle, that big candle from Monday. That's a fabulous green candle. I was looking at that and I thought, wow, look at DuPont. That's a great green candle. Look at Caterpillar. That's a great green candle. Look at that. Green, and a big move up today. So it's gone from a low of 349.80, and today it's at 340. It's up 10% from that low, 379. Look, so when you're looking at these, and I'm looking at this going into Sunday, looking for Monday's action, and look what FTX. Now look, FTX is much weaker, but it's still got a nice turnaround. CC is the Chinois company. What a nice move up. And MOS was the one that we had, and I wanted to get back in. I said, and then we missed. This is what I mean. When you miss something that's very strong, then you've got to say, okay, I do a little bit less. I'll close my eyes and I'll buy it. I mean, I should have done that this morning with Solventum just to add. I'm not complaining because we've got it. And we've also had trading positions on it. But that's the way it happens. But look, here is the mosaic, phosphate and potash. We're starting to move into other areas. I did all the homework on the darn thing. Look where it is. The target would have been 28. Today's high so far, it had a round number low 27, and it's trading at 27.56. And here's another thing, CCI. This thing never moves. It just keeps going down. Crown Castle and cell towers, fiber cells, had a nice move from the low. I wanted to see that. I wanted to see the behemoths, the dinosaurs start to move, the deep cyclical stuff. And I don't know yet until Friday because we want a weekly chart to be strong. But that was a nice move going into the low of Monday, into Monday's candles, Tuesday, and then the gap up today. So for me, that's kind of the arching move in the sectors means that you want to see. Now, let's just go back to the old Amazon, it's up 5 today, 222. But the chart is still just digesting gains. It's in a downward channel. Nice that it's moving up. Apple had a big pullback from 260.10 on the 19th of December to the 230 low of 3 days ago. Not bad, but see, this is the rotation that I wanted to see. That the deep cyclicals wake up as the overbought tech sector takes a breather. They don't have to collapse. They just have to take a breather. And that's let's go to NVIDIA. NVIDIA, woohoo, it's up 2.4 at 134.20. It was at 153 just a week ago. That's a huge pullback. So that's what I've been talking about. General Electric. General Electric's having a great day. I want you to get into General Electric finally after talking about it for ages, missing that massive move to the upside. Didn't get in. We've got others, so I'm not complaining, but this is important to me. I like to see General Electric act. Look at that monthly chart. That's pretty darn good. GEV, what a spectacular move that is. From the IPO back in somewhere maybe in June at about 100. Here it is at 390. GE Vernova LLC. So it spins off and there it is. Oh, I mean, that's great action, right? So it's the rotation. That's really what I'm saying. What I wanted to really say is you've got to have patience, and we've raised cash. Not everything's working. That's the whole thing. And that's the reason for having cash for those positions that were fabulous. Pull back some, and you still love them, but you didn't get in or you didn't add. this is where, if they've been successful before, for instance, I'm looking at this and I'm saying, the areas that I said could work and that we're going into, because there was a moment where there was a fluctuation in the market and now I can go through it. So I've gone through all the indices. Now I've touched gold. Look, gold had a big open. It went up all the way to, what was the high today? 27.19. It's at 27.02 right now. Stuck in a range, but not breaking down, not breaking up. Crude oil, I'm talking commodities now, is still up, breaking out to the upside very nicely. So we bought a refiner, and it's done nicely, a rig, but it's stalled. And I'm saying to myself, this is the opportunity because it's a separate thing, oil going up, but you've got Trump coming in saying, drill, baby, drill. What the heck? How is it going to impact Transocean Limited offshore drilling, oil and gas? Is it going to create a bit of a glut? So I'm now looking at this and saying, I think I might be able to move this money and do something else. Put it somewhere else. Because if you're looking at something like an Exxon, which is acting quite nicely, and it's gone to peak A, peak B, peak C, peak D. Oh, this is a leg E. But a buy mode that goes from a peak A to a leg E. And look at this tiny move. This is pathetic for Exxon. Exxon usually does this in one swoop to the upside. It does a move that goes from 105 to 111.03. And that's usually just one leg. So it's just telling me that, and I spoke about this about a month ago. I said, the reason why I think that there could be more peace in the Middle East than people are anticipating is that if you're looking at General Dynamics, there it is, GD, going from the 318 area down to 264 right now. If you're looking at LMT, Lockheed Martin, going from a high in the 620 area down to 480, Raytheon, which is a little bit more independent than the others, has still gone down quite sharply from the 120s down to the 112 area. Now it's at 118. It's a much better chart pattern than the others. And if you're looking at gold, as I always do, treat gold as not an instrument of economic growth as such, but more as a kind of an insurance policy with Mideast conflicts. I think that we might be looking, excuse me, hard to cough. We might be looking at a little bit more quietness in the Mideast than many people are anticipating. I think that would be wonderful, wouldn't it? I'll be back in a moment. Dow's up, 647. There's your pullback.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019. finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn. And he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So just let me explain, since I like to do this is live, therefore everything I'm saying has the implication of what happens in the next minute, hour, day, week, month. Will it come true? So I had said I use this parallel high in the 10-minute E-mini as a phantom peak, Chapman wave phantom peak. Why? Because I want to get to a D as quickly as possible. Not, I don't mean in time, but in the notation. I don't want to have this as a C right here, which it legitimately is, and then find that it pulls back really sharply and then go back and say, oh, I could have used that phantom peak and then I would have been ready. And that's why I say this is where it is money management says, take something off, raise your core stop, and have a secondary stop. And that if it goes high, it's fantastic. So you're taking a little bit off. Money management, great. I love doing that for subscribers and for myself. And now what you can do is, now you can still, and if we go to a higher high, about 59.91.75, then I just move this over. That becomes D. I actually keep the pink C and say, I did use that, but it wasn't needed. But if we start to fall from here at plus 98, at 59.81, you can see the pink 9-period moving average. The 5 is still very strong. 9 is way over the 14. And the 10-minute chart hasn't even gone below the 9. So this is just a preparation that if we start to fall, and if we do start to fall and take out 59.70 in the next hour, remember, this is the new players. They come in from 10:20 in the morning, and they go through until 12:15, maybe even 1 o'clock. And then you get another bunch. And then you get the final hour to half an hour. So this is where you watch, and this is where you've played your game, and you've made what you've made. You can even get out and say, I'm done for the day. Goodbye. I know you can do anything you want now. Okay. So with that said, this is part of what I like to do, and this is important. I don't always follow my rules, of course, because I'm only human, and I'm also I have restless fingers as a clarinetist. I'm always wanting to press buttons here. So all right, let's get back to our story. Within the context of what we're looking at, as I said, gold is going in a sideways movement. Silver has a lovely candle, but it's not anywhere as good a chart pattern in the weekly as gold is. monthly chart is still holding really well, having made a peak. D is the fourth highest peak. That's where other things can happen. The 9 is way over the 14, so silver's still acting very well. There are parts of silver that I look at, certain stocks, that say, hey, maybe silver at some point is going to move even sharper than gold. I don't know. They're still both stuck in a range. Let's go to Bitcoin. So Bitcoin, I had said about a month ago, I think back in 17th of December at 110,110. Now, that was a good point. What did I say before? Because, yes, in the Tiger YouTube, I saw somewhere, someone said something about what is TradeStation using because I don't have the Bitcoin over 100. I don't know. They've got Bitcoin futures. That's all I can tell you. That's what I've got. And it says today's high is $100,325. Okay? And I said some shorter term sell signal. They went to a sell mode. That's why I put the down arrow. But the weekly chart says, what are you talking about? The 9 is still way over the 14. This is still great action. And the monthly chart's at a leg D, not a peak D. So correct in saying there was a short-term pullback. And we're still long our IBIT. That's the iShares Bitcoin. It's done very nicely. So that's the story. So I also say that the IAI, which is this is the ETF for this is the iShares broker dealer and security ETF, has pulled back from the 2-bar reversal that it made with the double top in the 154 area. It went all the way down to 139. That's a pretty big pullback. Nice move up today. Almost looks like the Dow chart. So here again, someone asked me where are the resistance levels if the IAI, and we're in from 45. So this is a long-term position. We've had it since 2020. I believe it's 2020. Oh, sometimes these. I have to always try to remember from I think it was March of 2020. I'll find it here. Yeah, right there. From just below the low was 42.54. We went long, I think, the very next day, and we've been long since, and we've had other positions, but we also have Robinhood. So if the III is able to close any day this week above 148, whew, it's 146.44 right now. It did hit 147.28. But if it can close above 148, that's a good start to saying maybe now we can get some follow through to the upside. And if you're looking at Hood, and Hood is trading at an all-time high. The all-time high was around number 85. August of 2021 is trading now. You remember I had the target, the left side, right side price time match, and it said that in the month of January, it should hit 47.84. And that was the high of this candle, doji candle, the month after the August all-time high. So that's 47.84, and today's high is 46.22. It's got all of January to get there. And I had a Chapman wave inside wedge target repellent line, a left side, right side price time match. And that's what I'm using. This is bar symmetry, left side, right side. Great action right here. Very good. So, and I would say that this is partly a gold, but partly much more an eye. I can call it, and this is going to be quite important because within the context of what happens in January going into February, we'll see what happens. But this is the Bitcoin, partly a Bitcoin trade, but it also says that a lot of lay folks are now coming into the market, and that's already been important. And that's what I'm looking at, Robinhood. And we've been long since the low in August. In the 16s, it's trading at 45 right now. So that's important. Now, a rotation. So wait, what was the question? Oh, TBT. So here's a TLT, and it went under the rule March formation at 87.34 back in May or June. The TLT, the 20-year iShares Treasury Bond ETF, made a low and then ran up peak A, peak B, peak C. D's where other things can happen. Look, there's a D in the daily chart. Look what happened in December to the TLT. The card came tumbling down, and that means yields went higher, higher, higher. Well, this went to a D in the weekly chart and has pulled back sharply, and it broke the arch formation, which says if you take out the left side low, in this case 87.34, which it did right there. Let me just double check that. Yes, it did. You've got 2 bars, maybe 3, in which to close above it and then start moving towards the arch high. But it didn't. It continued lower and then lower and lower. And then on yesterday, it went to a low of 84.69. But look at this. And I don't know, I had this already to talk to Jacob about, and I don't know if I did. I'll get back this time. I'll do it when we get back. Now the Dow's at 601. Very good. That was a peak D.
This market has turned red, Tigers, and the question we should be asking ourselves is how to position for a potential bear market. Plenty of gains can be made in bull markets, but if we've entered bearish territory, that strategy needs to change. So, how do we pivot so we can see green in the red? Join Larry this month, January 10th and 24th for live trading action. You'll sit next to Larry as he places live trades, explains his methodology, and answers questions live. Larry brings his decades of trading knowledge directly to you, teaching you how to navigate this shifting market. Go to the front page of TFNN.com today and secure your spot fast for live trading Fridays with Larry Pesavento. Happy New Year, Tigers. We'll see you January 10th and 24th. TFNN. Educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hello, so the 1 minute EMA did have a sharp pullback, but the 5 minute, although it's pulled back, the 9 is still positive, and that's still, I'm calling it a leg D. But it's a phantom B because you got that C right there. So we watched it. So looking out for the rest of the day, if at any point the E-mini starts to take at 59.55, then we've kind of seen the high for the day, and we'll see what happens between now and tomorrow. But if it makes a high, wow, that's going to squeeze the shorts just dramatically. Now, real quickly before we go, Steve Rhodes coming up. Of course, great programming here. Look at the TBT, and I think I mentioned this to Jacob yesterday in the interview. I said there could be a double top here to peak D. because you've got this D that was made right here, as we were speaking, with a high of 38.98, which is that double top that goes to the high of 38.68 made back in May. So if that's the case, and then I'm looking this morning to say, where do I not have price for this? And there it is right now. Look at that gap. We're down $1.23 at 37.42. That's the first decent sign I've seen to say, even on the short term, you're seeing some kind of relief from the inflation data, and now you're starting to see yields come down. I like what I see right now. I think we've got a chance that we've made a low, not the low, but a low. And I just want to ride the tide. I want to just get on the wave and let it take me where I'm going to go. I don't want any riptides, no nothing. Just let's see what happens. And that's the way you have to look at it. I'm trying to shut out shorting altogether for the moment. There'll be places to short. It's a mindset. And the mindset says, tide will change, be ready. And I'm not a very good swimmer. I used to be pretty good at body surfing, but I'm lousy at swimming. So I'm very hesitant when I'm in the water, even though I grew up with the water and I love the water. So with that said, sunny day, well, it's a good day so far, but that low that was made before the open on Monday, or Monday's low in the Dow, certainly, I hope that's going to stay all the way through Friday. Have a great trading day and check out my opening call, my daily newsletter, and stay tuned for Stephen. Great programming. Yeah.